Yes, it's time for another trade recap where we will go through some trades that I did take yesterday and the day before, right? So, yeah, let's get straight into them. And this is a continuation trade from my anticipation and bias from where we anticipated some bearishness. Why? Because we did see these head and shoulder patterns. And then we saw what? We saw a break of this neckline. And I thought that, or my thought process when we closed below here on the H4, this is a H4 time frame. You can't see it, but this is a H4. But when we saw this breaker structure with a closure below this low this week, I thought that price was ready to go down to this previous weekly low, and that was my bias. Why? Because we did have some buy side liquidity here, and then we took it out. We made a shift when we closed below, and this is where one of my trades where I lost, because I entered in the CB, but price got a little bit higher, still respected this high, and then reversed, and yeah. So when we saw this breaker structure here, I was like, okay, now it's price is ready to go down. So we had this low where we wicked up, and then we had this high where we also wicked up to take out some buy side liquidity. So we can see that price was undecisive. It was taken out buy side and sell side, so it wasn't the best condition to take trades. But my thought process was that we also, if I go back to the weekly, is that we are currently in this blue weekly CB. So this is a weekly CB, this blue area. So we are in a huge downtrend, right? We got some rejections from the 200 EMA, and yeah, so we are in this weekly CB, so we can't forget that. And that's also one of my biases, because when we have weekly CB, it's a powerful tool to maybe look for some rejection, right? And we could see a continuation to the downside. So we got up to this daily CB here, this imbalance from this candle high to this candle low. The imbalance in between was our daily CB, which we entered a few times, right? So back to the trade. So as I said, I had a bearish bias because of what we saw on the weekly. We are in a bearish trend. We are currently trading in this blue area, which is our weekly CB, right? So we did have this breaker structure. Well, we had this snap break structure because this low didn't really make any higher highs in particular, but this low was taken out, and then so this could be entered to take any shorts. But when I saw this low, being close below, we saw that we closed below, and then we got this reaction. That was my like, okay, this is where I will enter from. So I did have this bias. So I did have this M15 CB that we will see, but I also had the thought process, okay, price could take out this Asian high and still go down, right? Because often Asian sessions are often liquidity here. Liquidity, we can see down here, liquidity. So often it works as liquidity, Asian session lows and highs. So if we go down to the M15 to see this, so this was the day where I took my trade, and I did enter off the equilibrium of the M15 CB, but we can see the price did what? We took out that Asian high, and then we plummeted. We made a lower high, and then instead we made this shift where price did a very aggressive buy, made equal high. So that was one sign that I did not like, because often when we see the price fail to make higher highs, we can often think that, okay, this price leg failed to make a higher high, so it's the bears are still in control, right? But that's not more than not often the case. So what price is really doing, it's engineering liquidity up here. So retail traders will think that this is equal highs, like I did this time, or I didn't think that because I noticed that I would like to see price take out this high maybe and then get aggressively down, or maybe respect this M15 CB and then continue to go down. These are the two options that I do like. Preferably not even get up here, really, but maybe respect this M15 CB and then continue to go down, or respect this high, like not further than this CB. But when I see that we are creating equal highs down here, once we're taking out sell side liquidity, we're engineering buy side liquidity. We're getting down, we are liquidating sell side liquidity, and we're still making, we take out this high. We should not see that. If we are in sell program, we should not see these kind of highs being taken out, honestly. These swing highs. When I say these kind of highs, I mean these swing highs, right? They should be respected. And I don't like the fact that we are just wicking below. We need to close below aggressively, and so yeah. So when price from around here, I understood that price it's a big chance that price is going to go when price is fooling around in these states. I'm starting to see that, okay, price is not ready to go down. So, but I did not move my SL to break even, because I thought it's either TP or stop loss. So I could have protected myself with like putting stop loss below some swing highs, but nah. So, like, a lesson is, and from here we can see, if I go back to the H4 time frame, we can see that there are multiple rejections on the H4 here. 1, 2, 3, 4. Does that look bullish to you? Does that look bearish to you? No. We have 1, 2, 3, 4, and this is also at like key areas where we want to see this break of structure, right? We want to see this break of structure to the upside, to the downside. But instead, we see multiple H4 rejections, and then from there we are just exploring up. So there are some lessons for me too. Like, even though if I have identified head and shoulders, it doesn't mean automatically that it should go some way. Like, we need to still see price action. We need to understand what the candles are telling us. We need to see where is the liquidity? Where is liquidity? And in my case, I thought that liquidity was this previous weekly low, right? So that's the case. So I lost on this AUD JPY. So I had a bearish bias on all JPY trades except US JPY. This was a win, very beautiful win. And the reason why I did win is because the simple fact that I understood that price is. So first of all, I did see on the daily, I did see, so this line is a psychological number, it's 145. You can't see it on the screen, but it's 145. It's 145. No, it's 142.5, sorry. And we did see this rejection on this line, and then we had this continuation to the upside, right? Or it's going up. I always forget the word, I don't know why. But on the H4 then, this is H4 time frame. So this was one of the losses that I took. I think it was, yeah, this was on the 22nd of August. So we have this so now we do have this buy side liquidity that I like the trade to take. So the reason behind this trade was basically I can identify that we are currently making higher highs and higher lows, higher highs and higher lows. So I was just trading with the trend and understanding at the same time that we are currently in a discount too. So price did tap into the equilibrium here, but we did reject it, right? And then we pushed up to make a higher high, but we failed and we made a higher low. This is the H4 time frame, right? So when I see that price first of all failed to make a lower low once tapping into the equilibrium, we see that price is slowly but steady making bullish structure, right? So I can see this low taking out this high, and this low was taken out during Asian session, so I don't really count it. But then the reason why I took this long was basically because we did have some liquidity here on M30, failed to close below. And I understood that price was ready to. I identified that we were in this trading range, respected some long, some short, pushed up. And my thought bias was, okay, if we close below these wicks, we should go down. But if we're rejecting multiple times like we are doing here, there is a reason why we're doing it. So, and this was the same time as we saw Euro, GU, AU all melting, because DXY or the US, yeah, the DXY had some bullishness into it. So I was like, okay, let's use it as another confluence too. So I entered long. I think the entry came at the M5. It was a very good, very beautiful entry. Yeah, it was this these two down candle, which was my bullish order block. 1, 2, enter on the first one, stop loss around here, and then the rest is history. This was okay. It was news that pull this up, but it's all calculated. We saw some small rejection to the downside, and then we just pushed up. So this was a win on USD JPY. Then we had Chef JPY, which was also a very beautiful trade, but it just missed me. It just freaking missed me. This was one of the better trades, I would say, if it would have entered. So basically what happened was, I said that I understood that we were a little bit bullish as compared to other JPY pairs. The chef is very bullish. So we can see that the Swiss franc against the JPY is looking very bullish, and so yeah. So what happened was that I understood that price is in a more or less uptrend. We did have so we had this break of structure, right? This low made this low, this swing low, pushed up to take out some buy side. We did have some lows here. This was all internal range. I would like to see this low was taken out too, but that's not important. So I understood that we were bullish. We had come back down to the discount. Massive rejections here. And the entry for a long position was basically because I saw that we have an inducement just below. We had a bullish order block just below some equal lows. So I understood that price was ready to go down, to tap into the order block and to then continue the uptrend. So, but I was a little bit greedy. So my entry should come from the equilibrium of this bullish, and we can see that also, that we have this bullish M15 order block with a bullish fair value gap. So I was like, okay, this is a massive confluence that price is maybe tapping into this to then continue upwards. But we can see that price just missed me, just missed the entry, and then and the target was, like I always said, the daily CB. But I would have taken out, of course, like 80% at this top, and let the rest run. And full TP would be at this blue area, which is our daily CB. Okay. So yeah, so that's my trades that I took. So this Chef JPY trade wasn't triggered. I closed it when I saw the trade was hitting up and left me behind. So yeah, that can happen sometimes. No reason to panic. There's always trades to take. Euro JPY. This one was, if you compare to AUD JPY, this one was very beautiful. This one was melting as a butter. I should have taken shorts at this one because JPY Euro is, we are in this weekly CB as we were in the AUD JPY. This yellow area is our weekly CB. So yeah, we can see the price sells our liquidity. Bam. So this was some trades I looked to take some longs. Yeah, we can just, yeah, the JPY trades, all the JPY pairs is very, it has a lot of volume. So it can go, if you're not properly managing your trades, it can wick you out. So yeah, but we can see that if you compare this to the AUD trade, that this one is looking more clean. We are failing to make higher highs. I did enter long here because I did see the exact thing that happened on the AUD JPY, where we saw rejections on the H4, right? We saw these two rejections, and I thought, okay, then price is ready to go up. So I instead took longs, and yeah, price made 1 week and then it killed us. So, and then my thought process was that we are going to go up to this area. This is a CB. Like I said, this arrow, then we go down, which exactly happened. So yeah, this is the trade recap. I'll see you soon.